Hello again. It's 7 o'clock. Um, I'm Samantha Bosshart, Executive Director of the Saratoga Springs Preservation Foundation. Welcome all of you again to Offsetting Rehab Costs, Unlocking Historic Tax Credits. We're excited to have this program tonight. Just going to wait 1 or 2 more minutes just to let those last few people that might be a little late on hopping on have that moment. But in the meantime, we'd love to know where people are tuning in from. So if you'd be kind enough to share it in the chat, where you're tuning in from. We always find it sort of fun and interesting. We have somebody from Troy. Nice. A lot of great architecture in Troy. Oh, glad to see Saratoga's represented. See some familiar names. Oh, Boston Spa, Binghamton. Nice. Up, Winter and Florida, Schuylerville. Great. Queensbury. Wow. There's usually somebody that's tuning in from Florida, especially this time of year. Oh, Brown Lake. So many great places with great architecture that's worthy of preserving. Well, in an effort not to delay too much, I'm gonna just kick off and tell just a brief bit about the foundation. Hopefully, because you have tuned into this program, you're familiar with us, but in case you are not, wanted to share who we are. We are a nonprofit membership-based organization, the Saratoga Springs Preservation Foundation, and our mission is to promote the preservation and enhancement of the architectural and cultural landscaped heritage of Saratoga Springs. Our organization was founded in 1977 at a time when Saratoga Springs did not look quite like it does today. And we like to think that preservation had a large part of its renaissance. We do our mission through advocacy, technical assistance, education, and restoration. So here's just a few pictures of things that we've worked on. We advocated for the 1869 Henry Lawrence house to be saved and relocated on a property that actually had no protection. So we're excited that that took place. We do walking tours every Sunday. We have some upcoming programs beyond this. We have Tuskegee Airman Clarence Dart by his daughter, Cynthia Providence, on February 20th. That will be a virtual program. And then to keep your eyes out for, we help people with technical assistance. So things like how to go about the tax credits, as well as how to work with the design review board and learning more about the history of your home. And then we've undertaken some recent restoration projects like 65 Philo Street that you see the green building in the middle. And recently we purchased the 2 houses on Clinton Street, and we will be working to preserve them. How we are able to do so much is because of our members and our donors. So if you're not a member, I encourage you to become one. $35 gets you some great discounts, $75 for a membership, and more benefits at the higher levels. But your voice matters, and it helps to make our voice stronger when you're a member. So if you're not a member, I would encourage you to be one. With that, I'm just going to kick off some very common myths about preservation before we kick off this program we have Christina from the New York State Office of Parks, Recreation, and Historic Preservation, and Kate from Worth Preserving. And before I go further, actually, I want to thank Sydney Hedge, our preservation and programs coordinator, who really was the one to put this whole program together. That she felt it was an important. It is an important program, and but she was the coordinator of it all. And so, hats off to Sydney for her work to pull this together. And I also want to recognize the New York State Council of the Arts for their funding that helps us do programs such as this. So, what are some common myths about preservation? I'm not going to read each and every one of them in this list, but I'll go through them. But there's a lot that are false. So here are some more. There's quite a few out there, unfortunately. And that means we have our work cut out for us as the foundation and who to help debunk some of those myths. So historic preservationists only want to keep buildings exactly the same. That is not an accurate representation of historic preservation. It is not meant to prevent change, but rather manage it. And I think preservationists understand that history and cities evolve over time, as well do buildings, and they all have their own story to tell. And so that's not an accurate statement. How that change may happen and how to make sure it's an appropriate change or helps to keep a historic character, that's what we're really interested in. If I want a historic house, I can't make any changes to the exterior. Well, this is where things kind of get a little fuzzy with preservation. It's not just the straightforward answer. Owners of designated historic structures may be able to make significant changes depending how their project is funded and whether or not it's located in a local historic district. Listing on the National Register of Historic Places is largely honorary. You can make changes to the interior and exterior of building as well as demolish it without seeking any permission. It's largely an honorary designation. However, if there was a state or federal dollars involved with a project, it would trigger a review and may cause some mitigation or different things. A property, so where you may not be able to do whatever you want is in a local historic district. That does require review of exterior changes, new construction, and demolition. However, that doesn't mean that you can't do them. It just means that there be review for it. Well, sometimes we don't like buildings to be demolished, I will say that. But we have never, here at the foundation, have said, no, you cannot build something. But what does it look like, and what is its scale and mass? All of those things, or maybe will be something we comment on. So many in Saratoga may not realize that we have several National Register historic districts, and here you get a sense of where they are located. I'm not going to run through each one of them. And then you'll see that we have local historic districts that are much smaller. And those are where you will have a review by the Design Review Board. So as I mentioned earlier, there are no restrictions on what a non-federal owner may do with their property if you're in a National Register Historic District. But if you need to make changes to your building, the Design Review Board will approve those exterior alterations, new construction, and demolition. And that's comprised of 7 volunteers who are appointed by the mayor, and they have relevant experience in historic preservation, architecture, construction, and much more. To learn more about what is required of living in a local historic district in Saratoga Springs, we're very fortunate. We have some great design guidelines that are very simple on different topics, from porches, roofs, new construction, site details, doors, windows. So they're really handy if you are interested in learning more about expectations. And we also have a brochure called Wait Before You Renovate that we did in conjunction with the city of Saratoga Springs. All of these publications are available not only on the city's website that you see listed below, but you'll also can view those on the Saratoga Springs Preservation Foundation's website. So back to some more myths. If I own a historic building, I can't make any changes to the interior. Well, there is no local oversight for interior changes. However, and you'll learn a little bit more about this, obviously, from Christina and Kate later, but if you're seeking the tax credits, they may be refused depending on what type of tax credit you're going for. Um, we typically use the state as well as the city uses the Secretary of Interior standards for rehabilitation. This is sort of it is the federal standard, but they don't require that every element remain exactly intact and exactly the same. There is an opportunity um, to make changes. Um, Again, it's not meant to be um, so that you can't ever make a change. Preservation is only for the rich and elite and the high style buildings. Well, you may notice from the picture that I posted of the two buildings that the Preservation Foundation recently purchased at 128, 130 Clinton Street. Those are no high style or rich or elite buildings. Those are buildings that we found worthy of preservation because of their style, their size, and who it represents who lived in them. And so, preserving buildings can be about preserving a diverse range of social, cultural, and architectural heritage. And so, it's not just about where did George Washington sleep. Preservation is much more dynamic than it's been, and it continues to be more dynamic more than ever now. Historic buildings are not energy efficient or nor sustainable. Well, most sorry, something just fell. Most newly constructed buildings use less energy compared to historic buildings, but existing buildings can be made to be competitively energy efficient. This is one of the ones where windows, you could add a proper weather stripping and a storm window, and you will have nearly the same um, energy efficiency. But it's about being more green than that. If you go to replace your windows, you're putting all of those windows in a landfill. You're paying for new windows, the energy for those new windows to be made, which won't be made local, and they will be driven from a far off place to get here and then be installed. So there's all these different ways to look at how historic buildings actually are more energy efficient because of their inherent embodied energy from when the materials were built. So just something to think about. Um, has a historic designation will reduce property values. Um, no study has ever found that true. And we can say that we studied 20 years of MLS data in 2018 in Saratoga Springs, and we certainly found that the values of buildings in historic districts, whether local or national register, far surpass building values outside of the district. Um, but you know, it gives National Register not only gives it significance, but it also um, I think raises awareness and makes people aware that they're someplace special. And then it, and also being in a local district, it can in turn help protect one's investment. So that's one way to think about it. And then just these are, I won't read through all of these because you guys have eyes and I think you all can read. But here are just some of the facts that some of the things that we found from that economic impact study in 2018, looking at 20 years of MLS data. I wish we could afford to do this study every so often, but it's quite expensive. But I don't think we'd find that anything much has changed dramatically from what we found through 20 years of research. But obviously, being more diverse and really contributing to the tax basis with a small percentage of land, but also attracting, you know, businesses and young firms to come to our community. So is it more expensive than new construction? No. typically keeping a historic building and working within the existing envelope, you will pay less. You also can make changes over time rather than doing everything all at once. That is largely a myth as well. So when you get in your head that, oh, it's going to be so expensive, I should just build new, that's not accurate. So just think about that, even though you might struggle with it on occasion. And then if you buy a historic house, there's funding available to pay for rehabilitation costs. Now, I wish that there was this big magic pot of money for everybody who owns a historic building. Unfortunately, there isn't this big magic pot of money. There are a few grants that are available, really largely to public entities such as government agencies or nonprofits. But for the homeowners, there's just not, quote, free money out there for any project. However, so this is where we get to our project, and this is where I get to turn it over to Christina, and she gets to share about herself and about the program that we're highlighting. You can be, depending on where you live, and you can get a tax credit that will help you offset your rehab costs. So with that, I'm going to let Christina take the helm.
Oh, I'm Christina Vagvolgyi. That's how you pronounce my weird last name. I am a historic site restoration coordinator at the State Office of Parks, Recreation, and Historic Preservation. We are separate from our main parks office because we are the division for historic preservation. So our offices are at People's Island in Waterford. And I've been there for almost 9 years now, and I have a degree in historic preservation. And I actually live in Saratoga, but I don't actually review things in Saratoga. So I'm here and I'm happy to answer questions tonight, but ultimately it's another person in our office that does cover Saratoga County. But what I'm here to talk to you about is our historic homeownership rehabilitation credit program. I can type it really fast because I do it all the time. This is a tax incentive program. So it allows you to earn a New York State income tax credit based on the amount of qualifying expenses you have for work you've done on your historic home. So it's not a tax deduction, it's a direct credit. So whatever you earn in credit gets directly applied to what you owe in New York State income taxes, only state, not federal, not your property taxes. And it can be carried over to subsequent years. So if you earn more tax credit than what you owe the state in taxes, you can carry it over the following years until you've used it up. That's the button. There we go. So who is eligible to use the credit? You have to pay New York State taxes. So some people own homes in New York but don't have income in New York. It's not going to do you any good if you don't have an income tax return that you file in the state, because that's the only way to capture this credit. Eligible buildings need to be listed in the state or national register of historic places. It can be either individually listed or it can be a building that's part of a historic district, as long as it's a contributing building to the district. And for this program, buildings must also be located in a qualifying census tract, and that has to do with what the median family income is in that area. Some census tracts do and don't qualify, I think. So this is the map showing Saratoga Springs. The gray shaded areas are the census tracts that will not be qualifying. It's basically, the green is the areas that do qualify. The yellow blurbs are the historic districts in Saratoga, the National Register districts that qualify for the program. Pretty much everything in the East Side District west of Nelson Avenue is in. However, this is based on what will be effective April 1st of this year. So if you are in the East Side Historic District and you live east of Nelson Avenue and you want to apply for a historic tax credit, call our office and put your application in before April 1st, because as long as you get that application opened while you still qualify, you'd be grandfathered in to be able to get through your project. So if there's anyone there that applies to, wait till the end and you'll contact Francis. So The spending threshold for this program is very low. You have to spend only $5,000, at least $5,000 on all of your work in your project. It's not per work item. It's the total work that you do has to be at least $5,000, and 5% has to be attributed to expenses on the exterior of the building. But that can also include mechanicals on the exterior. So if you're doing an air conditioning unit and the condensers outside, we're allowed to count that as exterior, but windows, doors, all that stuff is considered exterior. You can't get more than $25,000 in credit per person per tax filing in a year, in a single tax year. So if you spend more than $125,000, you would end up maxing out the amount of credit that you get that year. But there are ways to phase projects over multiple years where you're still capturing the maximum if you can spread your work out over more than 1 year. The application process for this program, one thing that's important to remember is that for the homeowner credit, you have to get the work approved prior to the start. So that would be either by submitting an application to our office, or for those of you who are in one of Saratoga's local districts, if you've gone to the design review board in Saratoga and they've approved exterior work, that actually counts as pre-approval for that program. So it's the way the tax law is written that either our office or a local commission can provide those pre-approvals. So that's something that's important to do to get that started. It's mostly so that we can ensure that the work, A, is appropriate for the historic home, and then B, that it's work that actually is covered by the program. There are review fees for the part 1 and 2 application that come in together at the beginning. It's only $25. The part 3 fee is based on a sliding scale. Depending on what your total project costs, the maximum you would have to pay if you're maxing out at $125,000 is $275. So all in, no one has to pay more than $300 in fees for the most expensive project that we can cover. The credit is claimed in the year that you get your Part 3 certified by us. So some people keep their project open for multiple years to have a larger credit in a single tax year. Some people do a project year after year. I have someone in Rochester who has used this program 9 times. So it's really up to you. If you want to keep it open for a couple of years, there's no ticking clock that starts when you open your project. We just don't want them to be open for 10 years and you're not doing anything, any work of the project. And then I think I already said there's no limit to the number of times you can use it. So that's nice. There is a lot of work that qualifies. A lot of, I think another myth is that only, really restoration work on historic features qualifies for the program. This is a homeowner credit. We want people to be able to live in and use their homes. All kinds of things count, repairing or replacing your roof, painting your house, fixing your shutters, repairing your porch, all kinds of the masonry repairs, even window replacement. I know in Saratoga, the local commission is maybe more strict about replacing windows, but we do allow window replacement in this program. As a general rule, we don't approve vinyl windows, but wood, aluminum, fiberglass, composite, as long as you're matching the configuration of what was there, we can actually be pretty flexible about window replacements. And then on the interior of your homes, so many things are covered. And like Sam mentioned, preservationists really aren't much for sticklers for the interior of your home. I always say, unless George Washington ate in your kitchen, we don't care what you do to your kitchen. As long as you're not, busting through exterior walls and completely changing windows, we generally don't care. And countertops, cabinets, flooring, plumbing fixtures, lighting fixtures, all that stuff that's a permanent part of your home counts for the credit. So that is really can be a huge advantage to offset those costs. And honestly, kitchens and bathrooms are 2 of the most frequent things we get applications for, and they can be the most costly. Even solar panels are covered by the program. We do require that they be minimally visible from the public right of way. So unfortunately, if you have a south-facing roof that slopes towards the front of your house, you're not going to be able to put solar panels on with this program, but you can install them elsewhere on your property. You could put them on your garage. You could have freestanding arrays in your yard. As long as they're tied into the electricity in your house, it counts for the program. So we get a lot of these in Brooklyn, actually, people putting solar panels. It's a little easier with a flat roof. The type of work that doesn't qualify, generally anything outside the footprint of your home. So everything down to that last step, but not walkways, not driveways, no landscaping. We don't cover removable appliances, so kitchen stoves, refrigerators, things like that, but permanently installed, like a hot water heater, is covered. You can't claim the credit for work that you do yourself because there's no way to quantify the cost of your time. But anything that you pay a contractor to do is covered. But if you are doing the work yourself, you can claim the cost of materials. So if you are painting the entire interior of your home, you can claim the cost of the paint as a qualified expense. No brushes or drop cloths, but the actual materials you can claim. And then obviously work that does not meet the Secretary of the Interior standard, which is what we use as a guide to help us determine what is appropriate for historic homes. So I don't want to get too far into it. This could be a whole separate presentation on its own, but the most important things to remember about the standards with regard to this program is that we want you to retain historic materials when you can, repair them, if they're damaged, and if you have to replace them, that they be replaced either in kind or with an appropriate replacement material. And actually the National Park Service did issue a new updated, they have preservation briefs about replacement materials, and they are becoming a little bit more flexible and understanding about the need for certain different types of materials in different areas of homes, and buildings in general. But that's basically what we use to guide how we judge what is appropriate for these cases. So another important thing is we don't expect you to go back in time. This is, rehabilitation, not restoration. We don't expect you to keep your home as a time capsule. It is your home. You have to live in it. It's not a house museum. So we want you to work with what you have. And if you have to take things out and change them around, it's totally fine. I actually approved someone installed like a tube elevator inside their home to get their aging in place, and they need to get from floor to floor. And it looks like something from the future. And now I want one. Even people with multifamily homes can take advantage of this program. So if you have a two-family house and you live in one of the units, if you do work on the interior of your unit, you can claim the full amount of the cost of the interior work on your unit. You can't claim any of the cost if you do work inside the rental unit. And then on the exterior, you have to prorate that what you claim as a cost based on how much you live in. So if it's 50-50, if you put on a new roof, you claim 50% of the cost of the new roof on your homeowner credit. So we also use this calculation if people say have like a home office or something, if they have an income producing component in their home. So there is still a way to capture the credit if you live in a multifamily home, but you have to reside in part of it. If it's a two-family house that you own, but you don't live in it, that's a commercial credit, and that's a separate program. So we were able, one silver lining of the pandemic was that we were able to really make a push to get our application available online. We used to have to collect hard copies with original signatures because of the relation to taxes, but now we can do that also through DocuSign. So you can submit a hard copy if you really want to, but we encourage everyone to do it online. It's essentially the same form, and it makes it a lot easier to be able to upload photographs and provide the fee payment information. I forgot to point out too that if your adjusted gross income is $60,000 or below, you actually don't owe the review fees. So that is one nice thing. the most important part of the application is the description of the work that you're going to do. So there's a worksheet in the part 1 and 2 application that asks you, to list out, it looks just like this, list out the work that you're going to do. Make sure that you tell us, the material of the thing that's there now and the material of the thing that's going to be put there. So, a roof, if it's an asphalt roof and you're just putting on a new asphalt roof, I love those ones. Those are like the easiest ones to review. We asked for an estimated project cost. If you haven't been in touch with a contractor and you're not sure what it's going to cost, but you know that you need to replace your roof, you can just say, you can put in your best guess. It's okay. A lot of times the costs end up changing by the end of the project anyway, so we don't really hold you to the cost. It's more important to describe to us the nature of the work that you're going to be doing. And then we also require photos. So we can't go to every house and make sure that you did what you said you were going to do. So we rely on photos, couple photos of the exterior of your home, and then detailed photos of all the areas where you'll be doing work. And then at the end, you submit those same, correlating detailed photos so that we can see how much better your kitchen looks. And then, after you've submitted the part 1 and 2, if you ever need to add work to your project, you can just shoot in a quick amendment form, which is basically just a short version of this worksheet, and then we add that to your project. So once it's approved by us, you'll get an email back. You'll see that we've approved. Maybe we put some conditions on it. You want to make sure that you read through that approval page, and then you go ahead and you do your work. It's important to keep track of your costs and keep your records of your receipts. You don't ever actually have to send your receipts or canceled checks or invoices to us. You need to report the correct amounts on that worksheet, but keep those for your records in case Tax and Finance has a question about your tax claim. So if you have, questions during your project, we're very easy to reach out to. We're very approachable. I even sometimes talk on the phone with people as they're filling out the form and air traffic control them through the process. So all of my staff is very helpful, and we're really willing to help people with this program because we, feel strongly about how important it is. So the part 3 application is basically just telling us what work you accomplished, what your final costs were. You may not actually finish everything that you originally said you would, but as long as you've spent at least $5,000 and you've done the exterior 5%, then you can put in a part 3. We absolutely need to receive it no later than December 31st for the year that you want to claim it on your taxes. So everybody who submitted by December 31st of 2024 received a certificate of completion that they're going to use with their 24 tax filing. The unfortunate people who submitted on the 12th are going to have to wait until next year to claim it on their taxes. So that is one important thing that we try to emphasize. And then I guess that was it for the homeowner credit. And obviously I can answer questions about it at the end. I will also mention that New York State also has a commercial rehabilitation tax credit. So there's a federal program and in New York State commercial rehabilitation credit. Kate's going to talk a little bit about this too, but properties have to be listed. In order to get the state side of the credit, it has to be also in a qualifying census tract. The work has to meet the standards. You can get a federal credit of 20%, and the state credit is 20 or 30, depending on the size of the project. So for projects under $2.5 million, it's actually a 30% state tax credit. So that is really can be very helpful. The biggest difference between the commercial and the homeowner credit is differences, I would say. That work ultimately has to be approved by the National Park Service. So the process for applying is to submit to our office the application. We take a look at it, make sure everything seems to be in order, and it's at a point where we feel that it will be approved, and then we forward it along to the Park Service. Ultimately, they're the ones who have to approve that federal credit. As long as they approve the federal credit, if you're in a qualifying census tract, all you have to do is pay a separate review fee for New York State, and then you get to claim the state credit also. So there is not 2 separate applications for the commercial credit, state and federal. But the most important thing to consider with regard to it being different from the homeowner credit is that the spending threshold for commercial projects is a lot different and a lot higher than our $5,000 for the homeowner credit. So I think Kate's going to talk more about the calculation to figure out what you have to spend for those projects, but it's more of like a big one-time deal, not, you know, a little project here and there that you can come in and do, you know, 5 different homeowner tax credit projects. So there is also a historic barn tax credit in New York State. The barn tax credit is I don't think it's on here. It's a 25% credit. The barns don't even have to be listed on the National Register. They just have to be built prior to 1946, and they have to have been for an agricultural purpose. Most barns are. We actually were able to get tax and finance to agree that carriage houses can also come in under this program. So if you have a historic garage, you're out of luck. But if you have a historic barn or a carriage house on your property, you possibly can get a credit. The minimum spending threshold is the same as the homeowner credit, only $5,000. A big advantage to this program is the work does not have to be pre-approved, and this can go retroactive. So the homeowner credit, we can't approve things retroactively. Like if you say, oh, I put on a new roof 2 years ago, can I get the credit? You're out of luck. But for the barn, it goes back up to 5 years. So if you do have a barn that you did work on, definitely reach out to our office, because that program exists and it can be very helpful, especially with all of the historic barns we have here in the state that are, you know, aging. Let's see. And you just can't turn it into a residence. That's the other thing you can't do with this program. So the contact people, I didn't put the barn person on here though. Frances Stern is one on my staff. She reviews homeownership tax credits and also our state preservation grants in Saratoga County. Weston Davey is the person who handles commercial tax credits in Saratoga County. So either of them can provide you with a ton of guidance. There's also a lot of information available on our website. So I think that's the end of what I have to say. So I will now pass it along to Kate.
Thank you so much. I am so excited to be here with this great group tonight. And there's so much to talk about. But let me get started. I am Kate Wood. My company is called Worth Preserving, and my work is focused on helping owners of historic properties figure out just that. What is special or worth preserving about their homes, and then how to plan and implement successful rehabilitation projects. So planning, strategy, and project support, that's what I do. So in this, tax credits are an essential ingredient in many projects. It's something I always investigate as an opportunity for my clients. But if you haven't heard about historic tax credits before, or if they've seemed too inaccessible or incomprehensible, complicated, you weren't sure if they applied to you, you are definitely not alone. There are a lot of people who don't know about this program, or have not sort of dipped their toe in figuring out if it applies to them. So I'm glad you're here. So to recap, I'm going to repeat a fair amount of what Christina has already presented, but I think that it's helpful because you're going to hear it from 2 different perspectives, and a lot of it, I mean, it's a lot of information. I think it bears repetition, and kind of seeing it through different lenses. But some of the key elements of New York's homeowners tax credit program. So like Christina talked about, it has to be listed in the state or national register of historic places, either individually or as part of a historic district. And those can actually be looked up on something that we call it CRIS in New York State, the Cultural Resource Information System. And I use it almost every day just to check whether buildings are listed on the National Register, and also whether they are in these qualifying census tracts. So that can also be looked up on CRIS. And it takes a little practice to get to know how to use the system, but the information, it's full of great information. At least $5,000 of the work has to be, or at least $5,000 has to be spent on qualified work. So it is a pretty low threshold because you know how projects just add up, and before you know it, you've spent, you're looking at the potential of spending way more than $5,000. The next few criteria I want to frame in terms of planning. It's a big part of what I do to help clients in that kind of phase 0 of their projects, when it's really easy to feel overwhelmed because it seems like there's so much to do, so many decisions to make, where do you even start? So it's tempting just to dive in and start, tearing into things and see what happens, or hand things off to a contractor and hope that they will figure it out. But when it comes to tax credits, planning is definitely your friend, because of those, those requirements that at least 5% of the total project must be on the exterior of the building. So you need to make sure that you're hitting that threshold so that all the rest of the work can qualify. You have to apply in advance. So those parts 1 and 2 of the application, you need to be talking to SHPO right at the very beginning before you start the work. You need to understand and adhere to the Secretary of the Interior standards, and make sure that your contractors do too, because you need to make sure that you're doing it in the way that you're not going to jeopardize your tax credit in the end. And then that $25,000 limit per taxpayer per tax year. Like Christina said, phasing can be really important. So kind of planning out how the work is going to go so you can optimize your tax credit over multiple years if that's what it takes. So just a little phase 0 background about me. I grew up in a 1927 Tudor revival house in New Jersey. My parents were big DIYers, and while it was very formative for me, I also feel like my career as a preservationist dedicated to helping homeowners is in part a form of penance for all the highly inappropriate things that we did to this poor house. I have a strong DIY streak in me too. My husband and I bought an abandoned circa 1890 house in Columbia County that helped me transition from my previous career in neighborhood preservation advocacy in New York City. So the kind of work that Sam and Sydney do at the Preservation Foundation. I really wanted to do more hands-on projects in the Hudson Valley. So with that introduction, I want to share 2 case studies from clients that I've worked with using historic tax credits. I mentioned that my home base is the Hudson Valley, but I work in about a 2-hour radius from the river. So that includes all the way up to Saratoga County, over to the Catskills, Massachusetts, Connecticut, down to New York City, New Jersey, Long Island, Pennsylvania. So I consider that kind of my territory. So the first case study is right in the middle of this area. It's a circa 1901 arts and crafts style house in Statsburg, New York, which is down near Hyde Park, FDR territory in Dutchess County. The owners hired them to help them plan and implement a whole house historic rehabilitation. And because this house was listed as contributing to the Hudson River Historic District and located in a qualifying census tract, they were eligible to apply for homeowner tax credits. So as part of our strategy, I helped them navigate that process with SHPO. So step 1 in any preservation project is identifying character-defining features. So what are the elements that no matter what need to be preserved? Because like Christina said, rehabilitation is different from, sort of museum standard restoration, and it's also very different from anything goes renovation. So it's that balance between keeping the key features that make your home special while allowing for changes that make it livable and functional in the 21st century. So in this case, the character-defining features included porches with exposed rafter tails, 2/2 wood windows, doors and trim, hardware, a statement staircase, and oak floors, and the list goes on, but those are some of the key features. So step 2 is identifying and planning the work that needs to be done. So looking at this before picture of the kitchen, and then of course, doing the work and getting to the after result that you see here. So the kitchen of this house was definitely not a character defining feature of this house. Generally, with kitchens and bathrooms, there's a lot of flexibility in how they're brought up to date. So here we chose to go with a design that nods to the arts and crafts style of the home, but we could have gone very modern. The elements that qualify for the tax credits would have been the same either way. In this case, you've got plaster and drywall, plumbing and fixtures, cabinets and countertops, the floor, electrical and lighting, and pretty much everything except the appliances themselves. So all the fixtures of this kitchen were included in the tax credit. Same thing for the bathrooms. A lot of times in older houses, bathrooms were shoehorned in, so they weren't part of the original floor plan. And even, so-called modern houses of the late 19th and early 20th centuries, like this one, there might have been just one bathroom in the house. So in this case, we did some fairly significant reorganization of spaces on the second floor. We moved a couple of walls, we moved a couple of doors to accommodate 2 new bathrooms. So again, the framing, the drywall, the electrical plumbing, the tile, the fixtures, they were all qualifying rehab expenditures for the historic tax credit. And again, we didn't have to use vintage fixtures the way that we chose to. We could have, used any fixtures to get a functional bathroom. So the exterior of the house really just needed paint, some minor carpentry repairs, and new storm windows. So still easily more than 5% of the total rehab cost was spent on the exterior. So stripping hardware is a great DIY project, but this is a good reminder to mention that sweat equity, just to reiterate what Christina said, sweat equity is not qualifying rehab expenditure. So if you can use a professional, then you'll be able to add that to your qualifying rehab costs. That said, soft costs like consulting, design services, project management do qualify. So it's not just the contractor labor and materials, but other kinds of support as well. So I want to run through one more case study. It's a very different kind of house in Germantown, New York. It was originally built circa 1800 and obviously altered later in the 19th century. In this case, the assignment was to rehab it for income-producing purposes. So as a residential rental property, the whole house was made available for rental. So we were able to qualify for both state and federal commercial tax credits with a combined value of 50% of the qualifying rehab costs. So I could talk forever about this property because I'm actually sitting in it right now. After 5 years of renting it out as a place to live, I've now turned it into the worth preserving headquarters where I'm going to be doing workshops and other types of projects to help build homeowner knowledge and confidence when it comes to historic preservation. But the same thing, I mean, we identified the character defining features. Here you see before and after of some of the work, restoring the plaster and windows, removing non-original features like the bathroom that had been added, blocking a hallway that connected 2 parts of the house. And then putting a new bathroom upstairs, installing radiant heat under the wide board floors. I mean, some of the the boards in this house are like 18 inches wide. It's incredible, but we put radiant heat underneath. And of course, paint. This is an interesting uh, sort of case study or mini case study because we were able to adapt the floor plan. I mean, floor plans are considered a character defining feature, especially on the ground floor where, you know, this sort of more typical public spaces, bedrooms tend to change. But there were two little rooms right off the main room of the house. And we wanted to create a connection between them. So we worked with SHPO to come up with this opening. SHPO thought it was important to maintain the sense of separation between these spaces, but it wasn't an outright no, like you have to keep these as two little rooms. So we made the connection. And, you know, it's that balance between preserving historic features and making them work for the present. And it's really, you know, it's a challenge that I really relish because, you know, I think it makes for just a much more interesting project, and that dialogue with SHPO can be really helpful. So just to point out some of the major differences, again, between the historic homeowners tax credit process and the commercial process. So both programs are designed to encourage preservation. But in the case of commercial projects, the bar is set higher because it's, you know, it's helping to enhance the project's profitability. It's not designed to help homeowners, you know, have a place to live. It's, you know, somebody's making money on this project. So, you know, it's just a higher standard. So in this case, we needed detailed architectural drawings, and then the form that you fill out is also more involved, you know, a lot more description about existing features and then, you know, what you're planning to do, what kind of work is going to be performed. And then here's some of the math that Christina promised. So the big difference between the homeowners program and the commercial program is that substantial rehabilitation test. So, you know, there's some accounting that goes into this. You should always discuss questions about the tax credit programs with a tax professional to make sure that you actually are going to be able to get the kind of benefit that you expect to. I am not a tax professional, so I'm just talking from experience here. But I just want to keep it really simple. It's based on the purchase price of the property. So something called the adjusted basis. So it's what you bought the property for minus the land value, minus depreciation, plus any, you know, previous improvements that you've made. So you come up with this number. And in a commercial project, you have to spend at least that amount on your rehabilitation. So you know, it's always way more than $5,000. So $5,000 for the homeowners credit is a very low threshold. It's always substantially more with a commercial project. So the math in the case of the homeowners tax credit is pretty straightforward. My client spent $250,000 in qualifying rehab expenditures and received 20% back in the form of a tax credit. So in their case, it was $50,000. That was a previous cap. If they had, you know, applied, it's still $50,000 if, you know, if there are two taxpayers involved, but they've changed that cap. So in their case, it was $50,000. Very straightforward, easy peasy. In the case of the combined New York State and federal commercial tax credits, we spent more like $500,000 and we're able to claim 50% back, so $250,000. Because the client had purchased the property back in the good old days when the purchase price was $99,000, that was, you know, roughly, like give or take, the minimum amount we needed to spend on the rehab. So much higher than 5,000, but still, you know, the house needed way more than that. So we were able to meet that test. Plus, remember, again, the commercial tax credit is a one-shot deal. So we had to do the project in one continuous phase. We can't go back and claim additional credits in future tax years. So we had to get it all done in one fell swoop. And again, by contrast, my clients in Statsburg, they can go back. They didn't get to replace their roof in the first phase of the project. So they could go, if they decided to replace their roof in 2025, they could apply for the tax credit for that. So in my experience, I just want to say this, SHPO is wonderful to work with on both types of projects. Their goal is definitely, again, in my experience, they're not gatekeepers so much as they're really helpers and facilitators. They want you to do what's right for your homes, for your buildings, and they want you to qualify for these programs. And because they just make preservation so much more affordable. So with that, I'm going to end and just say that I invite you to reach out to me anytime with questions about historic rehabilitation. I love hearing from homeowners and helping them problem solve. I am active on social media, and I also send out a bi-weekly newsletter and blog posts on various homeowner topics. So thank you so much for being here tonight.
Thanks, Kate and Christina, so much for sharing your knowledge and expertise and your experience. This program is a really great opportunity for people who have big projects. So if you have questions, you can type them in. There are a few questions that came in during the program. Somebody asked, and I don't know if either of you are going to be able to answer this because it may be an accounting question. What if the property is in a trust done through estate planning in the event of death? Does anybody know?
I do know. So,
okay, good.
well, I don't know about in the event of death, but I know that we do allow properties that are in trusts to use the tax credit. It just has to be like the person who is actually living in the home has to be the executor of the trust, or has to be associated with the trust, so they can file the tax credit and do it that way. I don't know. Is it just that it's in a trust because of the event of death, or are you saying what happens with the tax credit if someone does die? That I don't know how to answer.
Yeah, with the commercial
Correct.
tax credit project that I talked about, that property is in a trust.
There you go. Somebody asked, is there a basis versus project cost restriction for the credit, Fed and New York State? Is there a basis versus project? So that would be the Fed, correct?
That, I think maybe that refers to the adjusted basis discussion about meeting that substantial rehab test. So yes, it is that formula of calculating the adjusted basis for the commercial tax credit only, and then spend it, that's your minimum that you have to spend on in qualifying rehab expenditures.
And then there was another question. To be clear, let's say the total tax credit ends up being 100,000. If all the work is done in 18 months, you can spread the tax credit out over 4 years. I don't know. I think the state tax credit wouldn't allow up to 100,000, correct, Christina?
If you're talking about the amount of the total expenses being 100,000, but you can't get $100,000 in state tax credit for the homeowner tax credit.
Unless you broke it up into 4 different applications.
Based projects.
Right, but the 18 months throws me through a loop on this equation here, so I don't know how to answer that. But basically, yeah, if you had $100,000 worth of work and you spread it over if you did the work in 4 different calendar years, yes, you could spread the tax credit out over 4 years. If you accumulated more credit than you need, it could be spread over 4 years if that's the way it ends up with the excess of credit in what you owe.
Anybody else have any other questions?
It just
New one.
looks like there are a bunch in the chat.
Yeah, those were the ones. What if a home isn't habitable, abandoned or 10 years and isn't structurally safe, preserving, adding an addition to turn it into a 2-family?
So this was something I've neglected to mention, that you can use both credits together. Rarely does it happen, because very rarely do you meet the adjusted basis when you also live in the home. But if we're talking about something that's been abandoned and may need a lot of work, it's entirely possible that you could use both of the homeownership tax credit and the commercial tax credit. You can only, when you're trying to meet that adjusted basis for the commercial credit, you can't use the calculation of the work inside of your unit towards that basis. You could only use the commercial qualified expenses to calculate that basis. So it's definitely worth talking to an accountant about, because I am not a math person, I'm a buildings person, but it can happen.
But this addition would be new construction, and that's where the income basis would be, I believe, if I'm familiar with the project.
So that's interesting, because so in the
It's not an existing addition.
yeah, because anything outside of the footprint doesn't qualify for the tax credit. So an addition, you
Doesn't count towards the
you
QR.
can't treat it as a qualifying rehab expenditure. But you can, all the work on the historic building would qualifies. So if you're building the addition to be, I don't know, it like as a sort of new construction. I don't know if that answers the question.
It's a very nuanced project, so I guess I would just perhaps encourage
Paul Weston.
yes. Call Weston Davy at the show to help you figure out what would qualify and what would not. If there aren't any,
Christina, I have a question for you. Is there a way to know what the changes to the qualifying census tracts will be prior to April 1st?
You can ask us.
Okay, so if somebody is in, say they've been told that they're in a qualifying census tract now, but they're going to be changes as of April 1st, they could verify that with you.
Yes, they could, if they're worried that that's going to change. I
know, like I mean, census tracts are so weird. It's like, one side of the street could be qualifying and the other side of the street isn't.
For the homeownership credit too, we're allowed to make exceptions when things are substantially contiguous. So if you are across the street from, like, if you're on, I think the boundary is Nelson Avenue. So the people on one side of Nelson Avenue qualify, and technically the people on the other side don't, because they're in the other census tract. We would actually allow those ones in. It's something that we worked out with tax and finance. It does have to be low, like across the street from the boundary. It can't be like people 2 streets over. That doesn't work. But if it's, it's substantially contiguous, they allow us to use our discretion on the census tracts. But yes, there was something else I was thinking of that now slipped out of my mind.
Well, thank you to Christina and Kate for your time and expertise again. Again, thank everybody for joining us. If you're not already a member, I encourage you to be one. I'd be doing my job if I didn't promote being a member. Know that we are also able to, the foundation can also help provide some guidance as well. So, but if we have a question, we will direct you to the SHPO, but often some early questions, we are happy to help guide you if we can. Last but not least, just a update of some of the save the dates for you. Thursday, February 20th, the Tuskegee Airmen, Clarence Dart. We have a dine to donate at Panza's Restaurant. So if you're looking for an excuse to go out for a meal and have some delicious Italian food and help benefit us, 10% of the proceeds will go to us. And then just mark your calendar for our historic homes tour, Saturday, May 10th. So with all of that, thank you so much for joining us tonight. Oh, and do you
Sorry.
have some?
I have one thing because I see a comment about, I wish I'd known about this program in 2019. If there's anyone listening here, or if you know anyone who the only exception for retroactive approvals for the homeowner tax credits is if you have that golden local approval. So if you did do work on the exterior of your home 2 years ago and you got it reviewed by the Saratoga Commission, technically that counts as the pre-approval that you would need to get in for the homeowner tax credit. And because you claim the credit in the year that we provide the Part 3 certification, not necessarily in the year that you incurred the expenses, technically we can slide you into this program. So if there are people who are listening here, or if you know someone that's your neighbor that did work in the last couple of years and maybe didn't know about this program, or for some reason thought they didn't qualify, if they did have to go through that design review board approval process, that work could qualify for this program. So definitely that's worth reaching out. Sorry. Now I'm done.
Oh, no, that's okay. That's great information to share. And with that, I think we're going to close out tonight. Again, thank you, everyone. Thank you for joining us. Stay warm out there, and we hope to see you in February. Have a good night.
Night, thanks.